Hey everyone, welcome back to Corporate Decoder. Today, Universal Safety Products Inc. UUU just filed an 8K detailing a significant new loan agreement, and I am seeing some big red flags for investors. Quick note, this is not financial advice, just my take on public filings for educational purposes. This company is bringing in up to $10 million in new funding. But how they are getting it and what it means for shareholders is pretty concerning. Alright, let's dive into this 8K filing from Universal Safety Products. This is a company that makes building products and equipment. They have a market cap of about $18 million and are currently trading around $6 a share. They are a small company with only about 11 employees. The big news here is the date, the 12th of June 2026. Universal Safety Products, or UU as you know it, has entered into a significant agreement with SJC Lending LLC. This isn't just any loan, it is a convertible note financing deal. This filing is all about a material definitive agreement. Think of it as a major contract that could really change the company's picture. Universal Safety Products is selling convertible promissory notes to SJC, lending for up to $10.6 million, but they will receive up to $10 million for it because of an original issue discount. So UU is getting cash, but it is coming in the form of convertible notes. This means SJC Lending can, under certain conditions, convert these notes into shares of Universal Safety Products stock. The total value of the notes is $10.6 million, but the company is only getting $10 million up front. That $600,000 difference is an original issue discount, which is basically an upfront fee disguised as part of the note's value. Now, here is where it gets tricky for existing shareholders. The conversion of these notes into shares could result in more than 19.99% of the company's outstanding stock being issued. This is a big deal under stock exchange rules, specifically the nice American. If a company issues more than 20% of its outstanding shares, it usually needs approval from its shareholders. This is to protect current shareholders from massive dilution. This deal is structured in tranches, meaning the money won't all come at once. There will be up to the 11th of September R8 closings. SJC Lending has the power to decide when and how much they want to buy in each tranche. This gives SJC a lot of control over when the dilution actually happens. They've already done the first closing on the same day they signed the agreement. Universal Safety Products issued a convertible note worth $1.06 million to SJC Lending, but they only received $1 million for it. That is another discount. There are also triggers for future closings. Once UU files a registration statement with the SEC to allow SJC to resell the shares they get from converting these notes, SJC is obligated to buy another note worth $530,000 for $500,000. Again, a discount. After the SEC declares the registration statement effective, and importantly, after shareholder approval is obtained, SJC will buy another note for $530,000 for $500,000. Then, for the next 8 months, on each monthly anniversary, SJC is set to buy another note for $1.06 million for $1 million. This is where the bulk of the financing comes in, but it is all contingent on shareholder approval. For 90 days, the company is restricted from issuing new stock or anything that can be converted into stock, with some exceptions. This is a pretty standard clause to prevent the company from creating more dilutive events while this deal is in play. They also agreed not to enter into variable rate transactions until the notes are paid off or for a year. This usually means they can't issue debt that has interest rates tied to something that can change wildly, which could get very expensive. And here is another key point for SJC Lending's benefit. For a whole year, they have a right of first refusal. This means if UU needs to raise money again through any kind of stock or convertible debt offering, SJC gets the first chance to invest. This is common in these types of deals, but it shows SJC is looking to maintain their position and potentially get more investment opportunities. Let's talk more about the convertible notes themselves. The first one, already issued, is for $1.06 million but was sold for $1 million. That is a 6% original issue discount. These notes carry an interest rate of 8% per year. That is not extremely high, but if the company defaults on anything, that interest rate jumps drastically to 20%. That is a huge increase and a serious warning sign for financial distress. Now for the conversion part, which is critical. The notes can be converted into shares of Universal Safety Products common stock. The conversion price is set at the higher of $1, which is a floor price or 80% of the average stock price over 5 days leading up to the conversion, but it can't be more than $10 per share. This is a common feature in convertible notes to protect the investor. If the stock price drops to $1 or below, the investor can convert at that $1 price, which is much better than 80% of a low trading price. However, if the stock price goes up significantly, the conversion price is capped at $10 per share. limiting the investor's upside in extreme scenarios, but still allowing for significant dilution. This brings us back to the shareholder approval requirement. The company cannot issue more than 19.99% of its stock due to conversions without shareholder consent. This is the crucial hurdle they need to clear to access the full amount of this financing. This section confirms that this agreement is creating a direct financial obligation for the company. Essentially, they are taking on a significant debt. The information contained in Item 1.01 of this current report on Form 8K is incorporated herein by reference to this Item 3.02. The note described in this current report on Form 8K was offered and issued to SJC in reliance upon exemption from the registration requirements under Section 4, A2 under the Securities Act of 1933, as amended. This part states that the sale of these notes was done without registering them with the SEC, which is allowed under certain exemptions for private placements. This means SJC Lending is considered a sophisticated investor, and the company is relying on that exemption. The actual agreement is filed as Exhibit 10.1. This is the detailed contract outlining all the terms and conditions, and Exhibit 4.1 is the form of the convertible note itself, showing the specifics of the debt instrument. Now, looking at this more broadly, Universal Safety Products is in a tough spot. They're raising significant capital, but it is through a convertible note from a specific lender, SJC Lending. This indicates they likely couldn't secure traditional bank financing or a more favourable equity offering. The fact that they need shareholder approval for the majority of the funds is a huge variable. If shareholders vote no, the company only gets the initial $1 million and has to figure out the rest of its funding needs. Historically, companies that rely on these types of deeply discounted convertible note financings, especially when they need shareholder approval for the bulk of it, often signal financial distress. Think about situations like Sears or Radio Shack before their eventual bankruptcies. They often resorted to such financing. Cap companies that engage in heavily dilutive financing like this can end up delisted within a few years. A $1,000 investment in a company facing such dilution could realistically see its value plummet by 50% or more over the next year as more shares are issued. The risk I am watching is whether shareholders will approve this dilution. If they don't, the company is left with very little new capital and a serious funding problem. If they do, existing shareholders are in for a rough ride with significant dilution ahead. What I am actually looking for is a clear path to profitability and sustainable growth, which this financing deal does not immediately provide. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description.